Welcome back. Today we'll talk about Polo Marine. It started off as another oil and gas company listed in SGX. During the oil crash, it fell like any other companies. Their losses were so bad that I had to use a separate chart. However, it managed to save itself and stage a remarkable recovery. In the recently announced full year 2023 results, they achieved record revenues and profit. This is a really good performance. In this video, we'll look at what happened and why this company is worth watching. As usual, a quick reminder. A quick intro about Polo Marine. They have two business segments. One is the shipyard, providing shipbuilding, ship maintenance, repair, outfitting, and conversion services. It's located at Batam, Indonesia. The other is ship chartering. They have 14 OSVs involved in oil and gas and renewable, 9.5 sets of tugs and barge supporting the construction sector, transporting aggregate material to Singapore. The 2008 Great Financial Crisis did not affect them as oil prices were good. After the GFC, time was still good with high oil prices. Rates and utilization were high. From the high, oil price fell by about 50% in 2014 to the 40 to 60 range, and they got hit very badly. Charter rate plunged, many vessels remained idle. They had problems with bad debt collection. They suspended their share trading for about 9 months to sort out their debt restructuring and financing. They obtained $60 million in funding from 9 strategic investors and relisted. From a near death, they recovered very well. They focused on cost and cash flow management. Sales and profit grew well. Here is another perspective looking at its equity and cash position. While revenue increased yearly, revenue did not translate to any improvement in its cash position. Its cash position got worse and worse as revenue grew. This is bad. When the situation worsened and its revenue started to decline, its cash position worsened a lot more. Shareholder equity turned negative in 2017. In 2018, they secured money. They have been in a net cash position and generating free cash flow with growing revenue. This is a big change. The majority shareholder of Polo Marine has been its executive chairman during the period. He has recently retired. The restructuring and funding from 9 investors diluted its stake from 62% in 2017 to just 10.7% in 2018. This is painful, a huge cost to save the company from the brink of shutting down. Its stake has slowly increased to 14% as of 2022. Since listing, its son and daughter has been running the company. His son is the CEO and the daughter the CFO. There's no change in leadership after the disastrous performance and despite new investors having big stake in the company. They learned the lesson well. They have changed and made an amazing comeback better than before. I believe they will lead the company well. In their 2017 annual report, they shared that they approached more than hundreds of potential investors for funding and managed to get $60 million from 9 investors. It was certainly not easy as the industry was hard hit and many investors are unsure that this investment was worthwhile. Together with debt restructuring, they managed to save the company. Here's the list of SGX listed oil and gas companies. These are the survivors. Quite a few did not. Many still have high debts such as Mancast, Namchong, and Atlantic Navigation. It is the cost of surviving through the crash. MTQ and Mancast became smaller, their revenue reduced significantly. I examined each of them and found Polo did a better turnaround, in better shape and doing much better. The other good company is Dynamac, which I covered in a previous video. Do check it out. Here is how the two business segments has been doing. In recent years, their contribution has been roughly 50-50. For ship chartering, they have been enjoying improving charter rates and high utilization rate of their vessel. For shipyard, they have more contracts with better margins. They are marketing their shipyard for more projects. They are building a new dry docks to increase their ship repair capacity. They are expanding. For ship chartering, they are focusing on offshore wind farms. They are constructing a new CSOV and signed an agreement to deploy across offshore wind farms in Asia Pac. They are expanding and diversifying. Share price at 5 cents. The market cap is less than 200 million, quite small cap. The PE based on its 2023 result is only 7.3 times, very low. Cash flow and cash position are good, net cash at 60 million plus. They are also diversifying and pivoting into new sector and region like the offshore wind farm in North Asia. They are expecting existing business to do well. However, business are still highly depending on oil price and energy demand. Market seems to be unsure of its growth and potential as oil and gas is quite cyclical. Many has a bad experience with oil and gas counter after the 2014 oil crash. It is not well covered by analysts, so the market is not familiar with the company progress, hence the low PE despite the good result. The company near-death experience is a strong reminder that it may not be so lucky if it fails again. They cannot fail again. There may not be a second chance. They have to survive and strive no matter what. They need to be resilient and prudent given the cyclical oil and gas industry. Hence, their focus on growth with a strong balance sheet. They have changed indeed, in a much better shape now and growing well. This is the chart of Polo Marine since its listing. The share price has collapsed mainly because of the huge increase in shares during 2018, where the share count increased by more than 9 times. Zooming in, since the start of 2021, it was trading at 1.2 cents. Coming out of COVID, the market is not confident and has some doubt about the company. As it keeps delivering good results showing its turnaround, it has been trending up the channel for almost 2 years to 5 cents now. A good 3 times returns in less than 2 years. Can it keep growing? It already achieved record revenue and good profit. The market keeps doubting whether the growth can be sustained. Well, it just have to keep convincing the market with its result that they are good for the share price to go up, and it can easily go up with its low valuation. That's all for Polo Marine. Do give a like and subscribe to the channel for more such content. Hope you find this video useful. Thank you.